Hello, welcome to Hedgerow Investment Holdings. My name is James Koch and I was the CEO. It was my job to develop a suitable investment strategy that fitted in with the narrative and philosophy of our hedge fund. And I also investigated microeconomic risk and decided how to deal with those given risks.
Hi, I'm Ronan Coleman and I'm the COO. I provided information on macroeconomic risks to our hedge fund and also regulation of the financial markets, ensuring an understanding of which sectors and industries and countries would be worth investing in.
Hi, I'm David Kennedy. I'm the CIO of Hedgerow. My main tasks were investigating an extensive variety of stocks and choosing what to invest in. I based this on past performance, forecasted growth, and the current economic climate. I also manage the fund on a day-to-day basis.
Hello, I'm Leisha Collins and I was the CMP. My main responsibilities was investigating and research the psychology of investment and seeing how successful investors avoid common pitfalls by following a strong and deep narrative.
Hi, I'm Sam. I'm the CEH. My main duties were to investigate the historical performances of the fund and taking specific examples based on our narrative and of any interesting performances.
Well, now that you've met the team, let me talk you through our hedge fund and our different portfolios. When planning for our hedge fund, we believed it was imperative to have a clear and concise narrative to guide our investment strategy in a successful direction. For this reason, we created 3 separate funds to promote an investment for all type philosophy for the risk averse person all the way up to the risk loving. Much like our funds, the nous, or the heart of the narrative, is thought to be on a scale with varying degrees of logos, which is the logical side of thinking, and peer, which is the fire and passion which is ignited within the nous. Another aspect of our philosophy was to reduce all unnecessary risks possible. After conducting research into the psychology of investment, we realised the importance of not just focusing on making profit, but having a more wide and deep narrative. We've proven to be responsible citizens by investing in environmentally friendly stocks and healthcare. We've diversified our portfolio across 5 continents and many different industries. We've avoided the pitfalls of herd-like behaviour within the markets, and we've realised the importance of knowing yourself as an investor to avoid egoistic activities which could cause unnecessary risks. Investing in the world today can be an extremely tricky job due to a few issues which have arisen over the last year or so. Of course, the global pandemic, which is threatening a world recession, trade wars and Brexit, which are causing huge uncertainty in the markets, and quantitative easing, which has inflationary effects, which can reduce the real value of profits made in investments. Firstly, our fiscus stabilis, coming from the Latin to mean steady or stable, which is our fund aimed at those with a risk-averse attitude who only wish to earn a small amount of return over a long period of time. Then we have our fiscus incrementum, meaning growth or development fund, which is aimed at a risk-neutral investor who are looking for more fruitful profits. And finally, we have our fiscus perfectus, coming from the Latin to mean progress or advance, which is an aggressive fund tailored for the risk lovers who accept the uncertainty of highly volatile stocks in search of very high returns. For the fiscus stabilis, it can be seen that we've mitigated a lot of risk by investing the bulk of the fund in bonds, of which are government bonds, as there's low risk of them defaulting on payments, index-linked bonds, so as to not reduce the real value due to inflation, and also corporate bonds. Of the equities that we've chosen, the companies are historically known to be safe bets, meaning they've had slow growth over a long period of time, but growth nonetheless. The return for November in total was just over 2%, which is a very good return for a stable fund. For the fiscus incrementum, we've chosen to invest more of the fund in equities, all the while keeping a significant portion of the fund invested in secure stocks, such as bonds. Of the equities that we've invested in, we are more focused on the current affairs and those which are growing right now at the moment, such as the healthcare and technology industries. To further reduce the risk of these investments, we've heavily diversified globally over many different industries. The property markets which we hold a stake in are the US and also in a German company. Notable performers were CVS Health and Mercado Libre, which rose by 19 and 16% respectively, and the total fund return for the month was just under 4%. Finally, our aggressive fund, we decided to invest 75% in equities in emerging markets, 15% in global property, and 10% in commodities. The companies which we decided to invest in are young and in their growth stages, which we believe will have huge returns in the future. Companies include Lind PLC, which has a subsidiary called Praxair, which is a producer of liquid nitrogen, which could be used in the storing of the COVID-19 vaccines. And we also decided to have more of a focus on property investment after Joe Biden was elected to President of the United States, as he has a Biden plan, which intends on injecting money into the property markets. Bitcoin is one of the commodities that we've invested in, and of course that shows historically very, very large returns. The overall return for the fund for November was 22.86%. Keeping in line with our narrative and philosophy of reducing all unnecessary risk, we've introduced operational charges by hedging against these certain risks. We have bought Euro futures on different foreign exchanges to reduce the currency risk. And for all of the stocks in growth stages, where it is uncertain whether they will rise or fall, we have bought put options so that we can sell our shares for relatively the same price that we bought them in the future. And for interest rate risks, we've invested in many different equities that will give us a larger return than interest rates were they to rise or fall. And also for inflationary risk, we have index-linked bonds for our low return investments so that we do not lose money. In analysing our funds going back as far as 10 years, we've been able to predict future returns in the coming years of each fund as 2.83% for the Fiscus Stabilis, the 5.27% for the Fiscus Incrementum, and nearly 9% for the Fiscus Perfectus. Although it is a time of uncertainty in the global markets, we also believe that it is a perfect opportunity to invest, because after every economic downturn, there's always a growth phase in which we believe our funds especially will earn a lot of money.